Hey traders, Jason here with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys hit the like button and subscribe. Now, in this video, I'm going to go over why you should use moving averages. And then I'll also give you one or two that I personally like a time frame for the moving averages. So hopefully this video will help you. And with that being said, do me a favor, make sure you check out my weekly trade zones. The links down below. S&P Emini future support resistant levels, $99 one-time payment. And you get lifetime access. Been doing them for over 7 years, and you also get a 7-hour video course of how to draw the trade zones and a couple different trading strategies that I use on a daily basis. So go to my website, daytradingfearless.com, or check the link down below. But let's jump right into this video. Why you should use moving averages? Well, I believe there's a couple reasons. A, because they work, and then also B, is because you could find really good trades if you understand what the market's doing and how to kind of understand how these moving averages work, right? And so right here we have a 15-minute chart with a 200 period exponential moving average. For shorter time frames, even longer time frames, I personally like the EMAs, right? Exponential moving averages. Some people like the simple moving averages, but for me I just kind of pick one and go with them, because I've seen over time, half the time, the price will go to the 200 simple and the other half it'll go to the 200 EMA. Now, with that being said, if it's 50-50, why do I trade them? Well, there's a few reasons, right? Because I look for confluence with these levels that I really like, and when the 200 matches up with confluent, usually it works. Now, just like when and that's the EMA. Now, when the 200 SMA matches up confluence with other things, then usually that one works, and they're not always going to be exactly with each other. And so that's why I just pick one, I wait for my trade setup, and I use them. So all we have on this chart is pure price action, nothing else, right? Just candlesticks and a 200. Now, a couple tricks that I like, okay, when I use them are, is it sloping up? Is it sloping down? Or are we going kind of sideways, right? Just kind of really not going anywhere, something like this, right? There's really no slope, but it is going up a little bit. You could see it kind of turning and going up, but here's a good sideways action, right? It's not sloping down. It's not a hard slope like this. It's just more kind of sideways, and look at what price does, right? It gets stuck on both sides of the moving average. So what I personally like to do is see price fall, right? Come down, bounce, and then once you see a kind of a breakout and the trend, this is something really important too, is which way is the overall trend? Are we making higher highs, higher lows, right? This was a major breakout. This entire downtrend, right? We're making lower highs, lower lows. But the minute we breached this high, we could see this never breached it, right? Came short, bounced, breached it. On that pullback, see how we're sloping up now with that 200 moving average? That would be a buy point for me, knowing that, okay, hey, we have support, the line is sloping up, and we also are trading with the trend, which is what we want to see. Now, my stop loss, I would probably look for a major swing high, swing low, something like that. But look at the bounce we got off this support. Now, another way to trade something like this is if we have a close below, okay, below that trend line, Okay, and then that candle gets taken out. That would be my exit, because you could see we had a close here, but then the very next candle shot right up. If we closed here, I would have waited for that for this current candle to breach below, and that's where my exit would be. So that is another tip to help you be able to kind of manage risk on the trade. Now, as we see something like this, right, you have a big fall, right? We're sloping down, still sloping down. And what happens on the very first touch? It gets rejected. Right? Maybe that's a trade, the very first touch after, think of it as a rubber band, and then it comes back, right? It goes out and then it comes right back in. We would maybe use that, and that would be our kind of short, looking for a trend. And again, close below, use the high of that candle as your exit. And guess what? It never got breached. You had a double top, and then it failed, right? So like here, look at how we're starting to slope down on this price action. If we rallied into it and this lined up exactly with all this price action, old support blow through, the very first retest would become new resistance more than likely. If by the time price got there and the 200 was sitting right there, I would look for the short. I like I would like the risk to reward on that type of a trade. So these are ways I like to use the 200 EMA. Now, another EMA, I told you I'd give you another one. Another one that I like is the 20 EMA. So if we can go in, change this to 20, right? Okay, and this is more probably for a shorter time frame, maybe a 5-day, a 5-minute chart. Same exact thing. Look at this, right? We're sloping down, right? We're sloping down after we snap back to the mean, right? Or the moving average, and that could be your short. And look at that. We never even breached on the other side. Here, we came up, right? Maybe you missed that one. You could have taken this and say, hey, let me go short, wait for that candle to close, and then if the next candle breaches, that's my exit. But look at the fall lower, right? So that is another way of trading this, and that is using the 20 period on a 5-minute. So play around with these. Hopefully this video really helped you guys to kind of understand what to look for. Really look at the slopes, right? Look at this. We're sloping up. We pull back. We break the trend. Guess what? You could be a buyer of it. Kind of pull back, right? And then we kind of fail. And look at what happens. We close below. This candle opens, right? And then what happens? It takes out that low and it's off to the races. Here, we kind of dip below, never closed below, and then even this candle never took out that candle. So those are the two main things. And if you start to learn and watch this over and over, I think it'll really help you in managing risk and help you with the trade. So hopefully that video helps. As always, thank you for watching. Don't forget my video course and my weekly trade zones down below. $99 lifetime subscription, or just go to daytradingfearless.com. But as always, thank you again, and we'll talk to you soon.